Good evening, all. This is Carlos, CEO of GAR Capital. Thank you so much for joining me for this video and taking time out of your day to join me to talk about the top 10 stocks of 2023. These are the stocks that we like. A little bit of a switch up this go around. We did a little more ETFs. 2022 has taught us that single stock risk obviously is important. So again, what we did this year is really focused on the themes of why we like these stocks and why we choose them for 2023 to outperform. So before we begin, let's go ahead and go over at least last year's picks rather quickly. And as you know, 2022 was a rough one for the stock market. If you're watching this later in the future, obviously we'll see if we bounce. But again, we did fall into a bear market in 2022. So again, these stocks didn't do the best. But let's go over it for purposes of reference. Again, pardon the crudeness of this. Really wanted to focus on the new year. Goldman Sachs was one of our picks, down 6.6%, did outperform the S&P 500. Caterpillar, pretty much the only bright spot here, up 22%, did outperform, so Caterpillar, well done. SPY-G, one of my largest positions in my personal portfolio, SPY-G Growth, again, that has all the growth names that you could think of, Tesla, Nvidia, Google, Metaverse, so on and so forth. ARKK, expecting we were going to bounce back on that one, did not, continued to sink, was the worst performer of the top 10, the most risky one. Google down 39%, Nvidia down 49%, Qualcomm down 35%, crypto as well, 60% down on Ethereum. Costco did okay, compared to the S&P, down 14%, and Microsoft down 32%, so not the best this year. Obviously, as we focused on growth in 2022, growth did not work. I wish we had some energy stocks in there. I wish we'd had a little more value other than Caterpillar and Costco. Really went for the moon on that one, but in higher inflation environment and a restrictive monetary policy, this is what you get with growth stocks. So that was our picks for 2022. We will move on. Let's go ahead and get started. Now, just quickly for reference, I'm going to go ahead and go between Thinkorswim platform provided by TD Ameritrade and the Bloomberg terminal. So we can do our technical analysis on the stock here on Thinkorswim, and we can do more of our fundamental analysis on Bloomberg. So just want to go ahead and go over that. So here is the list provided by our team. I like this list very much. We had to switch a couple of things, but again, we really want to focus on themes. So right off the rip, you're probably saying to yourself, wow. So we count 1, 2, 3, 4, and 5 ETFs. Maybe you can count 6 as TLT. So again, a lot of ETFs. And the reason is that we want to kind of mitigate single stock risk. And you're probably saying to yourself, whoa, okay, you're all over the place with this. Well, we're going to go break it down from step by step. And I'm going to go ahead and kind of go over a couple things as well. We did a video for the investment club rather recently. I believe it was about last weekend. I did the video for them. And we were talking about the themes that we were expecting moving forward in 2023. And what I said specifically is I expect lower dollar, lower rates, lower inflation. Now, if you notice, I didn't say zero inflation. I said lower inflation, just lower, again, and a lower dollar and lower yields. That's kind of the three-headed monster I'm looking for, and this is going to kind of give us a background on why we chose what we chose moving forward. So again, today's date is the 29th, January 29th. So a couple of these names have soared because we actually had a nice little short squeeze. We finally broke out of that downward trend line. If you kind of want more details on that, make sure to sign up for our newsletter that we send out every week at www.gar.capital. That's it. There is no .com. It's just gar.capital, and you can sign up for the free newsletter as well. So here are the top 10 stocks of 2023. Let's go ahead and start. We'll start with Tesla. Tesla was not my first pick. Just want to go ahead and give that heads up. It was not my first pick in terms of providing a top 10. But again, Tesla, what can you say now after this move? Now this kind of makes me feel worse about this being on the top 10. But granted, I'm going to go ahead and talk about it because I am a Tesla shareholder. A little bit of background around Tesla. Elon Musk being the CEO, he went ahead and bought out Twitter. The majority of Elon Musk's net worth is based on his Tesla options, I believe, and his Tesla stock. So again, he had to sell Tesla shares in order to finish out the buyout of Twitter. Do I agree with that buyout? Not really. I kind of want Elon just to focus on making cars and possible making rockets, but really mostly making cars for the simple fact that I don't own shares in SpaceX. So I guess call me greedy in that sense, but again, I really just want him to focus on Tesla. So with that being said, there was some volatility in the name. We went as high as 414, all the way down to about $102 a share, split adjusted. So again, remember we had a stock split. So this is a 3-week chart. We're going to go ahead and start with the charts moving forward. So here is a 3-year weekly chart. And you can see that we finally broke back above the 200 moving average, which is very key. And if you've been watching our morning notes that we've been talking about now for the past 5 months, as Tesla was getting more and more volatile, we were talking about that 200 moving average on the weekly being a very, very critical point. We expected this gap to fill here right around 83.23, so that is also some risk there. But in terms of Tesla, I remember stating specifically on the video saying that once it gets to around $100 a share, it starts getting enticing, right, for a lot of individuals. And again, if you bought right around that $102 area, you're trading right now 177.90. That's a pretty great return. I did not add more Tesla at all, even though I am a shareholder, but nothing, I did not buy the dip at all. The only way I've been buying the dip on Tesla is with my SPY-G weekly allotments that I invested. So I put a little bit every single week into SPY-G, and again, Tesla has exposure to SPY-G. So again, that's at least the extent of my exposure with Tesla. Again, it's been a great stock to trade. I have traded it as well. But again, I want to get back to the charts here. In terms of what we're going to expect by year end, there is a gap to fill on the daily right around 261. Now, that's a hell of an expectation from this stock. I don't think we get there in terms of immediately or this year. But again, that would be a hell of a target to look at, though. I do expect us to get around 200, which gets us to that 100 moving average. Again, it's really, really close. We're about $20 away. But again, depending on how the Fed responds in terms of the FOMC meeting, we'll have about a couple of days in February 1st. Either a 25 basis point raise or a 25 basis point and pause. So again, it really depends on that, as Tesla is very sensitive to a rising rate environment. So again, that's very, very key. But again, some technical levels to look at. You do also have that $197, that 100 moving average here on the daily. You also have 220 being a key Fibonacci level as well. So again, 213 may not be a bad target here, around 220. Again, from where we are now, that's about a $50 move. If we're looking for the bull case, really, what are we expecting for the bull case? Straight shot. Again, everything works out in our favor. Lower dollar, lower yields, lower inflation. This can get back to this gap fill here around $261 a share. So about $90 from where we are currently at close on Friday the 26th, I believe. So again, let's go ahead and start looking at Tesla in terms of fundamentals. And we'll go ahead and do that. Tesla, we'll put that here. Okay, so Tesla here on the Bloomberg, you can see all the information that we want to know. We have PE multiples, which has actually accelerated higher because the stock price went high rather quickly this year in 2023. Off the lows, you're talking about a gain of around 70% to maybe 72%. And the lows were actually hit, if I can get this exact date, right on the 6th of January. So again, it's been absolutely on fire. Look at this year to date, again, up what? 44% year to date. But yet in a 1-year relative term, 52 weeks, it's down 36%. So again, a nice move higher, obviously, on Tesla. But again, it is rather expensive. That's what you're paying for. You're paying for growth. This is the #1 company when it comes to EVs, and their margins are absolutely spectacular in comparison to a Ford or a General Motors. Lucid, there was some talk about them getting an investment from the, I believe, Saudi Wealth Fund or Sovereign Fund. That should also make Tesla a little more enticing for shareholders who want to either add to their position or for funds who want to go ahead and dip their toe into Tesla, maybe thinking that it's a little bit oversold here. In terms of Tesla moving forward, we expect them to keep market share. I expect the Twitter stuff at least to die out or soon. I think everyone's kind of already accepted that Elon Musk is the CEO of Twitter. He laid off a bunch of workers. It seems like they've streamlined a little better. They have a monthly plan now. And again, I think he did say this on terms of a conference call for the previous quarter where he was saying that there was going to be some kind of Twitter and Tesla integration. I don't know what that exactly means. Maybe that means technologically speaking, but I think he means in terms of investment growth, that what's good for Twitter will be good for Tesla shareholders. Now, again, I can't be for sure that's what he meant in terms of that context, but it is something to watch for. I think that this is one of the names that as it continues to go higher, it kind of fulfills its own kind of manifest destiny in a way where it just boosts the options market higher. So again, the more people who buy calls on a Tesla, which is probably the #1 traded stock ticker out there, maybe next to SPY and Qs. But again, Tesla always has tons of volume. And again, this drives up the stock at least short term. If we get this continuous bullish flow, which I really don't expect to happen the way it's been going the last 3 weeks, I don't think we'll get to 220 by February 15th, let's just say. I don't expect that. But again, if we start getting some more momentum on the name, it may be a little bit overbought. Keep that in mind. But again, as that goes higher, it'll be the sharpness of the move moving forward. So again, if you're planning to hold this stock, just understand, have your targets, expect the volatility. That's the cost of doing business with Tesla. And again, they make some neat cars too. So that's always nice. Microsoft is our next one. And again, Microsoft is another one that we played last year. And the reason that we're saying Microsoft, at least in this juncture, the thing that stood out to me the most was that their investment into ChatGPT. Now that's an AI I'm pretty sure everyone has heard of. And again, Microsoft getting in the forefront, making that investment, it shows me that this board and this CEO is not afraid to take risks. Even as big of a company it has been laying off workers, we've heard that. And again, you could see the valuation in comparison to its peers. PE multiples are still kind of in that mid-range. Oracle and Microsoft being kind of in the same spot. Obviously, I would not compare Microsoft and Oracle other than cloud. But you could see the year-to-date return. It is green year-to-date. In a 1 year relative basis, it's down about 18%. But again, a PE multiple of 27. That is a little rich, at least here. So again, if you are buying this name on Microsoft, it's really for the fact that you expect AI to move forward and kind of fill the vacuum where cloud and Azure is becoming the main driver of growth. Microsoft needs to focus on another side of growth, which I believe would be artificial intelligence. So again, this is more of a fundamental play to me rather than a technical one, as we have not really broken anything that makes us rather excited. You'd want to get above 255, which would be that 200 moving average on the daily. If we go ahead and move over to the weekly chart, you can see at least we're above the 20-week moving average, 261 being the 50 and 274 being the 100. So again, at least on the longer term basis, there's nothing much to get too excited of. At least now, we haven't broken out yet. But again, a break of 255 may give us a little bit more confidence moving forward. There's a nice gap to fill at 284. If we break 266, which would be that breakout level, the 61.8 Fibonacci level, my target by end of the year would probably get us to around 285, which kind of coincides with my year-end target for the S&P. And I'll go ahead and bring that up rather quickly. And what I expect really is just to retest the August highs. And again, that's kind of the same range that we saw in Microsoft. Microsoft and S&P having a very similar chart. And you could see here that 4,300 level seems to be that ripe level to target, since it's just a retest of the August highs. And it really is just the peak of this major channel that we've been chopping around at, that we're finally starting to look like we're going to break out of as well. So again, if we kind of keep that same target in focus, lower rates, lower yields, again, this is very similar because that again is the August highs as well, and that also is a gap to fill. So again, if we fill that gap, more than likely that means that we're right around that 4250 S&P 500 level. Again, deviations being that the NASDAQ may just grow a little faster and maybe outpace the S&P moving forward. Again, we're going to stick with the same deal here, growth. And the reason I'm saying growth here is SMH. This is the Semiconductor ETF. In my opinion, guys, if you don't want to own this actual semiconductor, just the ETF itself, that's fine. But again, you can also just do NVIDIA as well, or a Taiwan Semiconductor or an AMD. So again, it really depends on you. I'd rather have all of them in one shot, SMH. And again, it is coming up to a breakout here around 246 area. So again, look, you could see that we did tap that bottom here of 166. And again, if we bring this up on the weekly chart, you can see that we recaptured that 200 moving average as well on the weekly, which is very, very key. We're starting to get very close to that resistance here around 245.89. That's the 100 weekly moving average. And again, that's kind of the similar approach that we were looking at in terms of resistance right there. You can see that on the daily, kind of a double top. That would be a break of the August highs. And we know that semiconductors are more high beta, meaning they're going to move a little more sharper in contrast to the S&P 500 as a whole. So again, the higher the beta, the more sharper the moves. So again, we expect us to break out of this level, which would retest the August highs near S&P levels. And again, you can see SMH may get a little closer to those August highs and even break out of them. I wish we had a gap to fill here on the daily, but we don't. Target looking like at least to around 260 to the 270 area. Again, you could always just take a look at NVIDIA, which is a very, very similar chart as well. And again, there is a gap to fill at 229, but yet NVIDIA has broken out of its August highs. So it looks like NVIDIA may be leading the way for SMH, which kind of confirms what we're looking for moving forward. Let's go ahead and see what the Bloomberg says regarding SMH. SMH being the ETF, and it is trading at a 21.92 multiple. So again, not very expensive in terms of growth. You could see year to date, it's already up 18%. 1 year return, how about this? Only down 7%, even after all that fall in 2022. So again, looking here at the PE multiple, I think 21.92 is actually rather cheap for this growth ETF. Again, you can always do NVIDIA if you prefer to, or AMD, or a Taiwan Semiconductor, for example, which also gives me some more confidence, as Warren Buffett's Berkshire Hathaway, I believe, put an investment into Taiwan Semiconductors as well. So again, SMH, some downside risk here would probably be any kind of unrest in China or Taiwan, any kind of war or anything like that. If that's something that would happen, SMH would fall as well. So again, that's something to keep in the back of your mind. But I don't expect much to come out of there, as in a sense, we already have a conflict in Ukraine and Russia. I highly doubt it gets into a global affair. I prefer if cooler heads prevailed. But again, that's not my call. But let's just hope that, and hope for the best. With that being said, if we had a Taiwan, China, some kind of war or something like that, the stock market would probably be the last thing on your mind moving forward. Let's go ahead and move it to something a little more positive. Let's go to Boeing, with being our fourth pick. Again, it's not an NFL draft. Again, it's just number 4 here. I have a target here of 219.78. This is a stock that I do want and expect to break out. Target being around 240 to 250 moving forward. If we go ahead and actually expand this chart a little bit, we got as much as 280 moving forward. So looking at the August highs, we're kind of coming close to it, right around 228 as we're trading around 211. Kind of the same deal, expecting the S&P to kind of give us that little bit of a bump in growth. As the S&P moves higher and higher, it should drag even value stocks moving forward. Boeing being kind of that weird growth yet value, used to be value, but they're more industrial, but they're still growth. And again, this stock has fallen from its good graces a long time ago, when it was trading around 446 back in 2019. So the question is, do we have faith in Boeing moving forward? Again, more aircraft, we expect more travel, we expect more shipping of goods. We expect not a recession, but again, a slowdown. But again, we still have demand for travel still moving forward. As people are still employed, we have a 3.5% unemployment rate. I don't want to get into, let's say, airlines themselves, because they're beholden to energy prices. And of course, labor issues in terms of staffing. Boeing just makes the aircraft, and they also have military capabilities as military hardware. So again, it kind of checks that box of if we have any more issues in terms of foreign affairs, Boeing would probably be a beneficiary of that, being a defense contractor. And if we still get travel, maybe the loosening of travel policies in China, that would be something else that I would be looking at as well, since Boeing does grow as China grows. It's always been Boeing, Apple, and Caterpillar have been kind of those, markers in terms of China growth, copper being another. And copper makes a stop into the top 10 stocks this year as well, as we're still keeping that the idea of a recovery in terms of China and emerging markets. Boeing would be a beneficiary as well. So let's go ahead and take a look at Boeing together. Boeing right now, again, negative EPS, negative PE, as we know, and then we're up about 10% on a year-to-date basis and a one-year relative basis. So Boeing probably being one of the riskier picks here, since they are still yet to make at least a profit, but their cash flow is getting stronger. So with that being said, you're really looking at a technical basis here of a break of 219 to possibly target right around 250 to 260. That should get you right around a good 15 to 20% return if this chart holds up and Boeing can actually get some more orders. Maybe the 737 Max, that kind of dwindles down. That fire was kind of picking up as the recalls kept coming in. It was this stock has been beholden to headlines. I would say the worst is over with Boeing. I think that the actual CEO and the actual board are starting to get it together. We could see with the stock price itself, as again, this stock bottomed right around the same time as the stock market, right around October 11th as well, but yet has outperformed the S&P. So again, kind of a higher beta as well, maybe, if you kind of look at it that way. The next one will be gold, GLD. Again, you could do gold coins, you could do whatever you want. Again, GLD being the tradable security here. And GLD, if we go ahead and expand this up to a 3-week, again, 183.45 to around 194 being the high. This is the same thesis that I have in terms of a lower dollar. And again, this is very correlated to the dollar. So let's go ahead and compare it to the dollar itself. And the dollar is really hitting its head on support here. I expect it to get to around 99 by the mid-year, if not sooner. And really the target we're looking for is right around 94. And again, we could see the inverse correlation between GLD and DXY because of the pricing structure of GLD being stock. The stock is being priced in dollars, yet representative of gold. So again, as gold prices do increase, meaning gold futures, and you can see a very, very similar pattern, very, very similar price action. But at least with GLD, we know what our targets are. We have a 185 target short term. Again, this is a pretty good hedge of any kind of also inflation if the dollar continues to fall. So again, gold would be a safer place to be. Again, don't expect much. Even from here, you're talking about a $15 increase from where it is now. So again, it's not meant to, make you rich either, but is one to just preserve things where they are in terms of capital and as a hedge against any kind of craziness out there in terms of the global economy. You may be happy that you have some gold. And again, this is the GLD setup in terms of Bloomberg, up 5% year to date and a one-year return of 7%. Again, that is outperforming the S&P 500. Moving it forward, we're going to go to IWM. This is small caps, and small caps are very rate sensitive. And again, they only grow when the economy grows as well. So far, we just got our report in terms of the advanced GDP. That was a rating of around 2.9% as of the January 29th. So we'll see what that is moving forward. In terms of IWM, let's go ahead and chart it together. You could see that we have the August highs right around 203. And we're trading at 189.58. Now we expect to break out of that because IWM is more of a higher beta. So again, I'm starting to take a look at possibly the 213 to the 220 level with a high of maybe 225. But a lot of things have to go right, meaning the dollar has to continue to creep down and rates have to continue to go down as well. So again, we tie in that thesis as well through the top 10 stocks as I recap them towards the end of the video here. But again, right now we're trading at 189. You can see that we're kind of breaking out of that trend line there, that resistance. Moving forward, again, I have a target of around 196 short term. August highs would get you around 201. Really, 213 would be a pretty base case scenario of what we're expecting in terms of IWM. And again, the IWM thesis really hinges on a lower dollar and lower yields. Again, these are small cap stocks. So let's go ahead and move on to emerging markets. In emerging markets, you can do Alibaba as well, Taiwan Semiconductors. These are more Chinese-focused stocks, and again, stocks in India and so on and so forth. EEM has been breaking out really since December and towards the tail end of November. And again, this is really because the dollar has been continuing to go down. So if the dollar keeps going down, then EEM is going to be a very big beneficiary of this as well. Target around possibly 46 to around 50 here. That's what I have here on the daily. If we could just retrace back to February of this year, that'd be great. But again, we need the dollar to really get us there in terms of EEM. So EEM being emerging markets, let's bring this up. And you can see EEM trading at a 12 multiple, very, very, very cheap. 11% year-to-date growth, but again, a one-year return, it's still down 8% in the last 52 weeks for EEM. And we could talk about as well the EEM holdings, and I'll read them to you. Emerging Markets EEM, this is the iShares Emerging Markets ETF, and the portfolio contains these stocks. These are the largest holdings. We have Taiwan Semiconductor, Tencent Holdings, Samsung, Alibaba, Medellin, I don't know how to pronounce that, JD, China Construction Bank, Infosys. So again, as everyone's been pretty bearish on actual China and China stocks, I'm not. I want to go ahead and play this chart here and take a look at possibly getting to around 46 to around 50. There is some gaps to fill to the upside. You got one right here, right around 42 that's getting close to being filled. You got one right around 45 and another at 48. If the dollar can continue to roll down south, EEM is going to be a beneficiary of that, guys. Let's go ahead and get to the S&P 500 equal weighted ETF. And the reason I'm doing this is if value outperforms growth again this year like it did in 2022, equal weight S&P will be the one to do. And you can see we're breaking out of that trend line. And the one big thing that made me want to choose this, the golden cross. The golden cross right here, guys, if I can show you, you have the 50-day moving average cracking above the 200 moving average. That's why it's very, very important, in my opinion, to look at technical, actual technical analysis, even when you're investing as well, because you want to get the best price. And I think right here, RSP breaking out of that trend line. Again, this is the equal weight S&P. Strip away the weighted averages like the regular SPY. This is just all the 500 companies equal weighted together, regardless if they're profitable or not. And again, you could see that price is moving ahead. And again, with that golden cross being very, very important and standing out to me. You also have the golden cross on EEM, which is the Emerging Markets ETF. How about GLD? We also have another golden cross. Very, very important. How about SMH? Another golden cross. 50 above the 200. 200 being in red, 50, the 50-day being in yellow. Microsoft. Are we there yet? No. We need a little more. And Tesla, are we there yet? We need a lot more. So again, you can see the big spread between the 200-day and the 50-day. But at least an RSP, EEM, I forgot, I think I did IWM as well. IWM is just broke. Just got the golden cross there on the daily. Great, great chart. So RSP being the equal weight S&P 500 index. Let's go to FCX, excuse me, FCX. FCX is copper, Freeport-McMoRan. And again, this will continue to grow as we get more growth, maybe a reopening out of China, and we start seeing economies not on the brink of recession, but possibly the brink of growth again. And the reason that we're picking that is because copper is a very big barometer for economic growth and construction. Freeport-McMoRan being the largest of the copper miners and refiners. I have a target here breaking out above 52. We're at 44 right now. Let's go ahead and take a look at some of the valuations here. Let's go ahead and also see if we golden crossed this one as well, guys. Yep, we golden crossed as well back in December 2022. And look at FCX, especially in 2022 with a very rough market in terms of growth. FCX outperformed Commodities. Year to date, now we're up about 17.95%. Year to date return, 1 year, 52 weeks, 26%. A PE multiple that is actually trading cheaper than the S&P 500 currently at 1859. It is still relatively cheap. So again, with the chart lining up and the actual fundamentals lining up, I like it a lot. But again, we do need the dollar to continue to go lower. We need bonds to continue to go lower, bond yields. And that takes me to my final one, TLT. This is the government iShares government 20-year treasury bond. So again, this is bonds, not the yield. Yields move inverse of actual bond prices. So let's go ahead and take a look at the chart. I have an alert here above 109.79. Again, the thesis is still the same. We expect lower rates, meaning more bond buying. Now, this one I'm a little more excited for because TLT has yet to do the golden cross. But again, I expect that it will, because if interest rates continue to go down, bond prices will go higher. And the real thesis I have is that maybe if we do come into a recessionary period, maybe slower growth, where else would you want to be than government debt that is paying a pretty decent yield currently? I believe on a 2-year basis right now is trading about 4%. And then you also have a 10-year trading around currently at 3.5%. I think that these yields will be too enticing to pass up. And again, more government auctions, more bond auctions out there. It's been consistent buyers really since the inflationary period of 2022. It looks like we bottomed out same time the S&P 500 did. If we can get a breakout of above 109.79, it gets more interesting around 120 for TLT. TLT, again, is just a bond fund. It's a good place to stash your money, get that dividend yield as well, especially capital appreciation, since TLT prices would go higher if there's more buyers. So again, pretty safe here with TLT, but again, it's a stock or an ETF that I've been tracking pretty much daily, since I do expect rates to continue to go down. Let's go ahead and take a look at rates here. The TNX, this is the 10-year Treasury bond yield. Again, we're trading still above that 3404 level, still kind of hovering around that same kind of support the way the dollar is doing. So the dollar continues to fall. I expect TNX to fall as well. And then you also have here 3149, and if all goes well, maybe we'll retest the same August level that the S&P 500 did. Their August highs was right here, right around a 2.79% 10-year Treasury yield. So again, the thesis is lower dollar, lower yields, lower inflation, slower inflation, lower inflation. That not inflation being at zero, not deflation, just lower inflation moving forward. Just want to give you guys a disclaimer as well. Again, guys, this is just my opinion. This is just our opinion here at GAR Capital. You are free to invest how you want. You accept all risk when you invest your money. You know what to do best with your money. Again, guys, feel free to follow us and ask us any questions that you can. When you are on our website, we have our contact us page as well. That's gar.capital. You can always message us on Instagram, tweet at us on Instagram, tweet at us at Twitter, excuse me, at GAR Capital. We'd love to hear from you guys. Thank you again so much for joining me for this video. I've been doing this now since 2014. That's going to be about 9 years in October. What a ride it's been through bear markets, bull markets, COVID, elections, you name it, we've been through it. So again, it's always interesting when we do this every single day. And I hope to catch you guys as well on our YouTube channel at 9 a.m. Eastern Standard Time on every market session with me, answering your questions live and talking about the market's headlines and what to expect moving forward. I appreciate you taking the time out of your day to join me. Have a great rest of your evening, and I'll catch you on our next video. See you guys later.